Good day. This is Peter Kniff from Castlestone Management with comments on the equity market for 16 November. The Dow Jones closed above 28,000 for the first time in its history, and all three major U.S. averages closed at records. In the absence of any negative news on the trade front and the release of positive data on the U.S. economy, investors continued to slowly gain confidence in equities. The market spent most of the week digesting last week's rate cut and the market advance thereafter. The Dow closed at 28,489. The S&P 500 closed at 3,120.46, and the Nasdaq closed at 8,540.83. Year to date, the Dow is up 20%. The S&P 500 has gained about 24.5%, and the Nasdaq is up 28.75%. The 10-year and 30-year Treasury bond yields logged our largest weekly drop in 1.5 months as uncertainty surrounding the trade deal and a rotation into risky assets drove bond prices down. The 10-year yield finished the week down 9.7 basis points, the 30-year dipped 10.5 basis points, and the 2-year slipped 5.4 basis points. I think most of that move was on rotation into equities. The ICE US dollar index dipped in early trading Friday after a weaker than expected retail sales report, but mostly has been rebounding from the October lows. Gold futures traded lower Friday, pairing their gains for the week after upbeat comments on the outlook of a Phase 1 trade deal between the U.S. and China robbed the metal of its haven appeal. Gold settled at $1,468.50 an ounce. U.S. crude oil prices finished with a gain for the week, with optimism over a Phase 1 trade deal lifting prospects for energy demand, even as traders weighed the oversupply in U.S. markets. In general, I would say that headlines on the trade deal are driving the market day to day, but overall, lower rates are what's driving the markets higher, and we're seeing a rotation from safe haven assets into riskier assets. I hope you find these comments helpful. Thank you for doing business with Castlestone.